What if I told you that what is happening in the crypto market right now is not random, not accidental, and definitely not something new? What if this exact pattern has repeated itself before every major breakout in history? Welcome back to We Are Cosmic. If you are serious about understanding the real mechanics behind cryptocurrency, especially XRP, and you want analysis from a strategic, long-term perspective, then you are in the right place. Today, we are going to break down what is so obvious in this market, yet most retail investors fail to see it. Right now, many people are confused. They are frustrated. Some are scared. The market has pulled back. XRP is not at its all-time highs. Emotions are high, confidence is shaking, and doubt is creeping in. But if you have been in this space long enough, you understand something very important. Before major regulatory clarity, before large institutional capital fully enters, before explosive moves to new highs, there is almost always a shakeout. This is not conspiracy theory. This is market psychology. Large institutions, hedge funds, market makers, and deep liquidity players understand one thing very clearly. Retail investors move emotionally. When price drops sharply, many people panic sell. When price pumps aggressively, they chase. This emotional behavior creates opportunity for those with patience, capital, and strategy. What we are witnessing right now looks very similar to previous cycles. Right before a significant event, especially something like regulatory clarity in the United States or major international licensing approvals, price tends to become volatile. It pulls back, it shakes confidence, it flushes leverage out of the system, over-leveraged positions get liquidated, weak hands exit the market, fear spreads across social media. But if you zoom out and look at historical charts, this has happened repeatedly since the beginning of crypto markets. Now let's talk specifically about XRP. Many people bought XRP during high excitement phases, especially near previous all-time highs above $3. If you believed in XRP's fundamentals at those levels, you have to ask yourself a simple question. Do you believe in the fundamentals less now or more now? If your answer is that you only bought because someone told you to or because it was trending, then your conviction was never strong to begin with. But if you entered because you understand Ripple's long-term vision, cross-border settlement efficiency, institutional partnerships, and regulatory positioning, then price pullbacks should not automatically shake your belief. Recently, Ripple received significant news from Luxembourg, where it secured a full EU electronic money institution license. This is not small. This is regulatory infrastructure. This is expansion into one of the most important financial regions in the world. While retail focuses on short-term price movements, institutions focus on legal frameworks, licenses, and long-term integration into the financial system. At the same time, Ripple and other major crypto companies have been in discussions with policymakers at the White House. This signals something important. The digital asset space is not being ignored. It is being shaped. Regulations are being discussed. Frameworks are being built. And historically, markets price in fear before they price in clarity. When I personally look at XRP right now, I do not see weakness. I see discounted pricing relative to long-term potential. That does not mean price cannot fluctuate further. Markets can always surprise, but from a strategic perspective, these red periods are often where wealth is positioned, not during euphoric highs when everyone feels like a genius. One strategy that has worked for many long-term investors is disciplined accumulation during pullbacks. Not emotional buying, not chasing pumps, but structured, consistent positioning into high-quality digital assets. The key is conviction based on research, not hype. The biggest mistake retail makes is confusing volatility with failure. Volatility is part of growth markets, especially in crypto. So the real question is this: are we witnessing weakness, or are we witnessing preparation for the next major expansion phase? If history is any guide, shakeouts often precede reversals, and those who understand the game are rarely the ones panicking at support levels. This year could be pivotal for regulation. It could be pivotal for institutional adoption. And if that thesis plays out, the current fear may look very different in hindsight. Now let's go deeper into this idea of the shakeout, because this is where most people misunderstand what is actually happening. When markets pull back sharply, especially after strong rallies, people immediately assume something is broken. They assume insiders know something negative. They assume the project has failed. But in reality, What we often see is a cleansing phase. Every major cycle in crypto has included aggressive corrections before explosive expansions. Bitcoin has done it, Ethereum has done it, XRP has done it. The pattern is not new. What changes is the emotional reaction of new participants entering the market for the first time. Institutions understand liquidity better than anyone. They cannot build large positions when price is euphoric and retail demand is overwhelming. They need fear. They need doubt. They need sellers. When the market corrects, leverage gets flushed out. Overextended traders who borrowed money to go long are forced to sell. This creates rapid downward pressure. That pressure creates panic. And panic creates opportunity for disciplined capital. If you study liquidation data across crypto markets, you will notice something interesting. Large liquidation events often occur right before stabilization and eventual recovery. It is not coincidence. It is structure. Markets move to where liquidity exists. Right now, XRP is sitting in what many would consider a discount zone compared to previous highs. That does not guarantee immediate upside, but it does shift the risk to reward profile for long-term investors who believe in the asset's utility. Let's talk about fundamentals again, because price without fundamentals is speculation. Ripple has positioned itself strategically within global finance. Their focus is not retail hype. It is cross-border settlement, payment corridors, tokenization, and regulatory compliance. These are not short-term narratives. These are infrastructure-level developments. The Luxembourg Electronic Money Institution license strengthens Ripple's ability to operate within the European Union. That means compliance, trust, and expansion. These licenses are not handed out casually. They require regulatory review, operational standards, and financial oversight. When a company secures this kind of approval, it signals seriousness to institutional partners. At the same time, ongoing regulatory discussions in the United States are critical. For years, regulatory uncertainty has weighed heavily on the entire crypto sector. Institutions do not deploy billions into unclear legal environments. They wait for clarity. If meaningful frameworks are introduced, capital that has been sidelined could re-enter the space aggressively. That is why these moments are so important. Markets tend to anticipate clarity before it becomes obvious to everyone. From a strategy perspective, many experienced investors use dollar cost averaging during volatile periods. Instead of trying to perfectly time the bottom, they accumulate gradually. If price drops further, they increase position sizing according to their plan. If price stabilizes and reverses, they are already positioned. Notice the difference between this and emotional trading. Emotional traders react to candles. Strategic investors react to data and long-term vision. Now let's address the idea of support levels. When XRP holds key technical support zones during broader market weakness, that tells you something. It suggests buyers are stepping in. It suggests supply is being absorbed. If those levels break, of course, the structure changes and risk must be reassessed. But as long as support holds, the thesis of accumulation remains intact. It is also important to remove the illusion that markets only move up in straight lines. Sustainable bull markets are built on pullbacks. Without corrections, leverage builds excessively and collapses become more violent later. Short-term pain often prevents long-term disaster. Another psychological factor to understand is that wealth is rarely created in comfort. When everyone feels confident, opportunities are usually smaller. The biggest asymmetric opportunities appear when uncertainty is highest. That is uncomfortable, but that is reality. I am not saying price cannot dip further. Markets can always move lower than expected, but what I am saying is that this environment is not unusual. It is consistent with how previous expansions have formed. So instead of asking, why is price down? A better question might be, what is changing in the underlying fundamentals? If the fundamentals are strengthening while price is pulling back, that divergence should not be ignored. This is where conviction is tested, not when candles are green, but when timelines are red and narratives turn negative. And historically, those who endure these phases with discipline are the ones who benefit most when the reversal finally arrives. Let's take a closer look at why now might actually be one of the best opportunities for strategic investors. When people panic, they often miss the bigger picture. They focus only on price, not on the infrastructure, regulatory progress, or institutional adoption happening behind the scenes. That's exactly what's going on with XRP today. While retail sentiment is shaky, Ripple is moving forward in multiple directions that will have a lasting impact on the market. First, consider the licensing news from Luxembourg. A full EU electronic money institution license isn't just a formality. It's a major endorsement of Ripple's compliance standards, governance, and operational strength. For many digital assets, regulatory approvals are what separate speculation from sustainable growth. This type of license allows Ripple to expand services legally across Europe, opening doors to partnerships with banks, fintechs, and payment providers that demand regulatory compliance. Think about the long-term implications, real-world use cases, growing transaction volumes, and integration into mainstream financial systems. The kind of infrastructure that makes an asset like XRP more than just a speculative token. At the same time, Ripple's involvement with U.S. regulators is another critical signal. Being part of discussions at the White House isn't something that happens to companies that are struggling or under scrutiny. It's reserved for organizations that are strategically significant to the future of digital finance. This indicates that Ripple is positioned as a key player in shaping upcoming regulations, which could provide clarity to the entire crypto ecosystem. Regulations may feel like a threat to some investors, but in reality, clear regulatory frameworks reduce uncertainty, attract institutional capital, and encourage mass adoption. Now let's talk about market behavior, because this is where most retail investors get tripped up. The pullbacks we are seeing are not a failure. They are a natural part of the market cycle. Large players intentionally create volatility. This is not manipulation in a sinister sense. It's how liquidity works. Shakeouts force weak hands to exit, eliminate leverage, and create opportunities for long-term holders to accumulate more tokens at a discount. This is why understanding market psychology is crucial. Short-term fear often disguises long-term opportunity. If you take a step back, this is exactly what we've seen before every major bull run. Price dips, retail panics, and institutions quietly build positions. Then, once regulatory clarity or adoption milestones occur, the market reverses sharply, often exceeding previous all-time highs. Those who have prepared, researched, and accumulated during the pullback are positioned to benefit the most. From a personal strategy perspective, disciplined accumulation is key. Instead of chasing price spikes or reacting emotionally to red candles, consistent buying into high-quality assets like XRP can create significant long-term upside. This doesn't mean blindly throwing money at dips, but rather following a well-thought-out plan that balances risk and conviction. For example, setting daily or weekly purchase allocations and adjusting exposure if price drops significantly is a method that many seasoned investors use to maximize gains while minimizing regret. It's also important to recognize that wealth in crypto isn't made when the market is euphoric. Most people make money in hindsight, after panic selling and fear have created discounted entry points. True opportunities appear during uncertainty, when fundamentals are strengthening but price hasn't reflected that yet. This is the classic asymmetric investment scenario, limited downside risk relative to a large potential upside. Finally, let's address the psychological aspect. Many investors focus only on short-term price swings, social media sentiment, or trending news. This leads to emotional trading and costly mistakes. The most successful participants in crypto are the ones who can separate emotion from logic, who understand that temporary volatility does not negate long-term fundamentals, and who remain disciplined when everyone else is panicking. So, in short, the market may feel uncertain today, but that uncertainty is what creates opportunities. Regulatory progress, institutional involvement, and real-world adoption are all happening behind the scenes. For those with patience, discipline, and conviction, this phase could be the foundation for significant future gains. The shakeout may feel uncomfortable, but it's exactly what positions strategic investors for long-term success. Now let's break down why understanding market cycles is critical if you want to succeed in crypto, especially with XRP. Many people see a sudden drop in price and panic, thinking the project is failing. But in reality, these corrections are normal and in fact healthy for the market. Think of it like this. A tree needs to shed old leaves to grow stronger. The same applies to markets. Shakeouts remove weak hands and over-leveraged positions, leaving room for stronger, more confident participants to thrive. Historically, every major bull run in crypto has been preceded by a period of consolidation and correction. Bitcoin has done it, Ethereum has done it, and XRP has done it. What we're witnessing now is simply another phase of that natural cycle. Retail traders often panic because they don't understand this pattern. They see red candles and assume it's the end. But those who study history know that these dips are often opportunities in disguise. Let's also talk about leverage, because it plays a huge role in these shakeouts. When retail traders borrow funds to amplify positions, any sudden market movement can trigger forced liquidations. This creates rapid downward pressure and amplifies volatility. On the other hand, long-term holders who aren't using leverage can actually benefit from these moments, acquiring more tokens at lower prices. In other words, the market is temporarily offering a discount to those with patience and strategy. Now let's tie this back to Ripple. The company is moving on multiple fronts. We've discussed the Luxembourg EU license, which opens the door to legal operations across Europe. But Ripple is also actively engaging with US regulators. These conversations are crucial because they will help define the rules for the broader digital asset space. When frameworks become clearer, institutional money that has been waiting on the sidelines is likely to flow in. And this is exactly what moves markets dramatically. Another key factor is understanding the difference between short-term price action and long-term fundamentals. Price is emotional. Fundamentals are rational. XRP's fundamentals are strong. Cross-border payments, partnerships with banks, and adoption in financial systems around the world. While retail sentiment may swing wildly, these fundamentals continue to strengthen. This is why disciplined accumulation during pullbacks makes sense. It allows investors to increase exposure while the price is temporarily suppressed, preparing for the eventual upside. It's also important to emphasize that wealth in crypto isn't created when everyone is euphoric. It's created during uncertainty, during moments when price is down and fear is high. That's when opportunities are most abundant. Retail investors often chase trends, buying near the top and selling near the bottom. Long-term strategic investors, however, do the opposite. They accumulate during fear and benefit when the market reverses. Let's address one more point: patience. In crypto, patience is more than a virtue. It's a strategy. Markets can remain irrational longer than you expect. But if your thesis is based on solid fundamentals, regulatory progress, and adoption trends, patience allows you to take advantage of these moments without succumbing to emotional decisions. Finally, consider the psychology of this moment. Many investors feel uncertain because volatility creates fear, but volatility also creates opportunity. Red periods are when institutions and knowledgeable investors build positions. Green periods are when retail sentiment catches up. Understanding this dynamic is crucial for anyone who wants to approach crypto as a serious investor rather than a speculator. In short, what we're seeing now is consistent with every successful crypto cycle. Shakeouts, corrections, and volatility are normal. Regulatory clarity and adoption are on the horizon. Those who remain patient, disciplined, and focused on fundamentals are the ones who are likely to benefit the most when the market eventually reverses. It's uncomfortable, yes, but that discomfort is where strategic opportunities live. Let's now talk about strategy, because understanding the market without a plan is like having a map but no compass. Right now, XRP is showing a pattern that many experienced investors recognize: a temporary pullback within a larger uptrend. For long-term holders, this is not a signal to panic. It's a signal to act intelligently. One of the most effective strategies in these situations is disciplined accumulation, sometimes called dollar-cost averaging, where you buy consistently over time instead of trying to time the exact bottom. The beauty of this strategy is that it removes emotion from decision-making. You are not reacting to every red candle or social media rumor. Instead, you are building a position in a controlled, repeatable manner. The market will always fluctuate, but over time, accumulating high-quality assets during dips tends to create substantial upside when trends reverse. Many successful crypto investors have used this approach for years because it works. Another key point is to understand risk management. Even if you believe in the long-term potential of XRP, you cannot ignore the possibility of further market volatility. Setting limits on how much you invest at a time, maintaining a diversified portfolio, and avoiding over-leveraging are all essential steps. The goal is not to maximize short-term gains, but to survive and thrive during both ups and downs. Discipline and patience often matter more than timing. Let's also revisit the fundamentals of XRP, because price alone doesn't tell the whole story. Ripple is not just a cryptocurrency, it's a platform aiming to revolutionize cross-border payments. With the Luxembourg electronic money license, it now has regulatory clearance to operate across Europe, which opens doors to banks and fintechs. At the same time, Ripple continues engaging with US policymakers. These actions build the infrastructure and trust that are required for widespread adoption. Strong fundamentals reduce long-term risk, even if short-term price swings are uncomfortable. It's also important to remember that volatility creates opportunity. When retail panic sells, assets often trade below intrinsic value. Experienced investors see this as a chance to increase exposure at a discount. In contrast, emotional traders often sell at the lows and miss the eventual upside. This is why moments like these are critical for anyone serious about building wealth in crypto. They separate those who act strategically from those who react emotionally. A practical example, I personally accumulate XRP every day during pullbacks. I have specific levels where I increase my position and other levels where I pause. This allows me to take advantage of dips without risking overexposure. This kind of disciplined, systematic approach is what separates long-term success from short-term frustration. Now let's talk about timing. Nobody can predict the exact bottom or the exact moment of reversal. Markets are influenced by many variables: regulatory announcements, global macroeconomic conditions, institutional adoption, and investor sentiment. That's why patience is so important. Instead of trying to predict the future, focus on what you can control: your plan, your research, and your consistent actions. Finally, mindset is everything. Markets test your conviction, they test your patience, they test your ability to separate emotion from logic. Those who maintain focus on fundamentals, regulatory progress, and disciplined accumulation often emerge stronger when the market eventually reverses. This is where real opportunity lies. Fear can be paralyzing, but strategic thinking turns fear into advantage. Now let's bring everything together and look at the bigger picture. Crypto markets, and especially XRP, are not random. They follow patterns shaped by human behavior, institutional strategy, and regulatory developments. Right now, what many see as uncertainty is actually a critical setup for the next phase of growth. This is where knowledge, patience, and strategy separate successful investors from those who follow emotion. The first key takeaway is understanding the role of institutions. They don't act on hype or speculation. They act on infrastructure, regulation, and opportunity. When you see price dips, remember that these players are quietly building positions while retail investors panic. Shakeouts, corrections, and volatility are all part of the process. They are designed intentionally or naturally to clear weak hands from the market. The stronger investors remain, the more capital is available when adoption and regulations create upward momentum. Second, regulatory clarity is coming. Ripple's recent Luxembourg license is just one example of how the digital asset space is evolving. It's not about speculation, it's about real-world adoption. When XRP and other projects are integrated into established financial systems, the demand for these digital assets grows naturally. Additionally, the ongoing discussions with U.S. regulators will help define the legal framework for this sector. When these frameworks are in place, institutional money that has been waiting on the sidelines will flow in, driving market reversals and potentially all-time highs. Third, let's address personal strategy. The most effective investors don't chase price, they prepare for opportunity. Dollar cost averaging, disciplined accumulation, and risk management are essential tools. By purchasing strategically during pullbacks, you position yourself to benefit from reversals without succumbing to panic. It's not about timing the market perfectly. It's about building positions intelligently over time. The key is patience and conviction in fundamentals. Fourth, mindset matters more than price. Many investors focus only on short-term swings, social media sentiment, or trending narratives. This leads to reactive trading and mistakes. Real opportunity lies in maintaining focus on fundamentals, long-term vision, and disciplined action. The most profitable investors are the ones who act logically when others panic emotionally. Right now, fear is high, but that is exactly what creates opportunity. Fifth, remember the asymmetric potential of digital assets like XRP. Price movements today may feel uncomfortable, but the combination of regulatory progress, adoption, and institutional involvement suggests that the long-term upside far outweighs the current downside. Volatility is not the enemy. It is the tool that creates discounted entry points for strategic investors. The shakeouts and dips are temporary, but the value created by real-world use cases and infrastructure is permanent. Finally, wealth in crypto is created during the hard times. The red periods, the pullbacks, the uncertainty, these are the moments that separate those who build long-term success from those who chase trends. History has shown that the biggest gains come after periods of fear, not during euphoric highs. Understanding this and acting strategically is what positions you to thrive when the market eventually reverses. So as we wrap up, remember this: shakeouts are natural, regulatory progress is accelerating, and adoption is growing. Discipline, patience, and understanding the fundamentals of XRP will give you an advantage. The current pullbacks are not the end. They are the beginning of the setup for the next wave. If you maintain conviction and act strategically, you are positioning yourself for long-term success. This is exactly why I say, the opportunity isn't in the hype. It's in understanding the process, embracing the pullbacks, and building your position with intelligence. Focus on fundamentals, stay patient, and remember that real wealth is made during periods of uncertainty. So, tell me in the comments, are you preparing for the next phase or are you letting fear control your decisions? As always, I appreciate your time, your engagement, and your support. Stay strong, stay focused, and we will see the next wave together here at We Are Cosmic.